What is a control account? I shall make use of an example to help me simplify control accounts. So assume control account is the name of a manager at a company, and ledger account is an employee who is monitored by the manager. So the manager's duties are to monitor the employees and also verify accuracy of the work done and identify errors and fraud. In this illustration, the manager monitors the duties of the employee. This same concept applies to control accounts in reality. Let's derive our definition for control accounts now. A control account is an accounting tool that verifies the mathematical accuracy of the ledger accounts for presentation in the final accounts. Just like in the illustration, the manager monitors the duties of the employee. The control account monitors or verifies the activities in the ledger account. Uses of control accounts. So they used to monitor ledger accounts, like we mentioned earlier in the illustration. So what do we mean by they used to monitor ledger accounts? We mean they are used to verify mathematical accuracy of the ledger accounts. So one may wonder, what do we mean by verify mathematical accuracy of the ledger accounts? Mathematical accuracy, we're checking if the entries in the ledger accounts have been correctly summed up or calculated. So what happens is, if the balance in the control account does not match the balance in the ledger account, then that's an indication that one of the two has got an error somewhere in the calculations. So it helps identify if there has been any mathematical inaccuracies. They are also used to identify errors and fraud. So let me explain an error. So an example is, the bookkeeper may have mistakenly debited a transaction that was supposed to be credited unintentionally. So the control account will not match the ledger account with errors. There will be a variance. So this variance will act as an indicator of errors in the ledger account. This is how the control account helps in identifying errors in the ledgers. Now I'll explain a fraud. So you have to identify or be sure of the differences between an error and a fraud. So like we said, an error, a bookkeeper may mistakenly debit a transaction that was supposed to be credited. But a fraud, it's intentional. An error is unintentional. A fraud is intentional. Right? So employees in charge of the ledger accounts have a duty to maintain the ledger accounts, but they are not allowed to maintain the control accounts. So they may fraudulently or intentionally take cash receipts from the till and cover this up in the ledger accounts. So the ledger account will not be able to identify this because it's prepared by the same people who committed the fraud. So they will try to sneak out or try to hide the fraud. However, the control account will identify this because the control account is prepared by a different person in the organization. So the control account will vary from the ledger account, meaning this variance acts as an indicator of fraud or fraudulent activity in the business, or fraudulent activity in the ledger account.